Alright guys, this is the last video of market structure. You know that we are learning smart money concept, and the smart money concept has three categories. The first one is market structure, the second one is liquidity, and the third one is POI, or point of interest. So this is the final class of market structure, and in this class I want to teach you about what we call market structure shift, and how do we use a double break of a structure. A market structure shift is an indication that the market is about to reverse and go to the opposite sides. I think you understand what I'm saying. For example, if the market was bearish, okay, let's say this is a bearish market, and the market is trying to reverse to the upside, the market, before a reverse, it will do some configuration below here and start to reverse to the other side. So the market structure shift, it is obviously what is happening before the market get the reversal. It means that before the market starts to go to the opposite side of the direction. So this configuration that is happening here is what we call market structure shift. So what is the market structure shift, and how do we define market structure shift? As I said, the market structure shift is an indication that the market is about to reverse and goes to the opposite direction. I will give an example again. This is the higher high, higher low, higher high, higher low, higher high, or lower low. I don't know, lower low. Let's continue. Now, before the market gets to the opposite direction, the market needs to clear the previous high. Once it get the previous high and pass that level, do you understand? It means that the market is about to get the opposite direction. You see, for example, this is a key level that has been broken. This is another key level that has been broken. This is another key level that has been broken. And this one is also a key level that has been broken. So when the market come and take out the higher high of the previous trend, it means that the market is about to reverse to the opposite direction. Let's go to the chart. I will give you an example of it. Okay, let's say, for example, in this bearish market from 5-minute time frame, okay, so we have a breakover structure to the downside here. We have another breakover structure to the downside around this place, and we have also another breakover structure from this place. So we can see that the market has been bearish from this 5-minute time frame. All right, and what happened? We don't have another breakover structure to the downside, but we have a breakover structure to the upside. It means that the market has taken out the previous high. So it means that the market is about to reverse. As we can see, what happened? The market has taken the reversal to the upside. This is what we call a market structure shift. Okay, right now I'm going to take the opposite direction for you to see. For example, in this bullish market, we have a breakover structure here. We have another breakover structure here. We have another breakover structure here. And those who know, they can definitely see a double breakover structure here, right? I am giving you double breakover structure for you because I know that I've taught you about the first one. Okay, we have another double breakover structure around this place. So the market has been building itself. We have a breakover structure here, and we have a double breakover structure around this place. Oh, I don't think it's a double breakover structure because it has to be above. So this one is another breakover structure, and we have this one, but it is not a breakover structure because price didn't came and take it out like this. But what happened? Price went out to take his low. So we have a market structure shift. It means that the market is about to change the direction. And what happened when market does this type of configurations? The market will definitely change the direction, start to go to the bearish again, as you can see here. You get the point, right? This is what we call a market structure shift. It is, let me write for you, market structure shift. For abbreviation, it used to be like this: market structure shift. So the market structure shift is an indication that the market is about to change the direction to the opposite side. I don't know if you are getting the point I'm talking about. For example, let's talk about this one. You had a previous bearish market. This is a breakover structure. This is another breakover structure. And this is also a breakover structure to the downside. Take this lesson very serious because it will help you in the future when you start to trade. But we don't have another breakover structure to the downside here. Why? Because price came to take the previous low, or the previous high, sorry. So this zone, it is what we call a market structure shift. Do you get the point I'm talking about? So this is what we call a market structure shift. How can I put this one? It used to be in the middle, in the center. All right, something like this. So what happened when we get this type of configuration? Definitely the market will start to change the direction and go to the upside. Okay, now listen carefully. I think that I'm talking to the traders who understand, or let's say traders who already know smart money concept. So, and I think that you already know this concept. Right now, I want you to get the next concept. We have market structure shift, and we also have a double break of structure. Double break of structure. How are we going to use those two concepts? You need to understand that the market structure shift is when the market is about to get the reversal to the opposite side. Okay, that's when we use the market structure shift. But double break of a structure, we use it for continuation of the trend continuation. Okay, what does it mean? I'm going to give you the example. If this is a bullish market, and the moment that the market take the previous low, means that the market is about to reverse to the opposite direction. So this configuration is what we call market structure shift. Why? Because the market took the previous low like this. Do you understand? Let me do it well because I want all of you to get the point. Okay, but double breakover structure, we use it for market continuation. Let's say this is a bearish market, okay, and we are getting double breakover structures. All right, so let's say this is a double breakover structure. Double breakover structure, we use it for continuation of the trend. It means that If this is a bullish market and this is the higher or the high that we are going to take off, it means that after taking the market structure shift, that means that the market is about to change the direction. Any trade that we are taking around this zone to take the higher or take the new height, it should be double break of a structure. Do you understand what I'm saying? For example, if this one is a bullish market, pay attention on this, please. If this is a bullish market and we get the market structure shift taking this low, so any trade around this place to take this low again in a bearish market, we need to use only double break of a structure until we clear the new zone or the lower zone. Do you understand? So in this place, you don't have to look for another market structure shift again. You only look for double break of a structure because it's for trend continuation. Until what? Until you take the lower or the lower part of the trend. I want you to understand the point. Let's go to the chart for you to see what I'm talking about. For example, we are coming to take this bearish market. Okay, focus on this bearish market. We have a market structure shift. Let's say this is a market structure shift around this place. Why? Because it took out the lower low of the previous trend, something like this. I think you can see it, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. You see the market structure shift, right? As right now we are changing the direction to go to the opposite side to take out this low. Any trade around this place, it should be only using double break of a structure. So we don't have to look for another market structure shift around this place. We only look for double break of a structure until we take out this lower zone. Do you understand what I'm talking about? So that's the point. So any trade around this place should be focusing only on double break of a structure until we take out the zone or the low that we are looking for. Same point to the uptrend market. If the market is bullish and we are looking to take this higher high, it means that after we take a market structure shift around this place, is a market structure shift. So when we take the market structure shift around this place, any trade that is beyond this place, let me do it, please. No, there. Any trade that is beyond from here until we take out that zone, it should be focusing on double break of a structure. So double break of a structure is for continuation of the trend, and break of a and market structure shift is when the market is about to get the reversal. I want you guys to understand, this is the last class of market structure, so I want you to understand this very clear. It's very important because let's say, for example, you see this is a bullish market, right? So people are buying on this zone to take out this zone. All right, so this is the zone that we are looking for. You see, right? We are looking to take this zone out. So any trade that has to do with anything around this place is only double break of a structure until we take out the higher high. So wherever we take here the market structure shift, this is the market structure shift. When we take out the market structure shift, any trade beyond or any trade after taking the market structure shift should be focusing only on double break of a structure until what? Until we take out the new zone. So just simple as that. You don't have to complicate many things. For example, if I have to take a trade around here, this is a break of a structure, this is another break of a structure, this is my liquidity, okay, and simple as that. This is the point of interest. I understand that right now you people don't understand those concepts, the concept I'm taking right now, but I will teach you, don't worry. What I want you to understand is the market structure, is the market structure, because this is the last class of market structure. Do you understand, guys? So this is very important for you to see it clear. Any trade around this, this is the market structure shift that we took in this place. So any trade around here to take out this low should be only focusing on double break of a structure. Do you understand, guys? So double break of a structure is for trend continuation, and the market structure shift is for trade reversal. So I think this is the end of the video, because next video is going to be about the liquidity part of the strategy. Okay, the liquidity will be in the next video. So this video is the last video of the market structure. You guys need to learn too much about that, because it is very important. Go to your chart, analyze the chart, take your time, read some books about market structure, and most especially you need to practicalize what I show you on those videos, because it is important. If you don't understand market structure, you can continue with the strategy, because you need to understand market structure, liquidity, and POI, or it can be point of interest. So you guys, if you take this shit serious, I'm telling you the truth that you can be unprofitable trader. This is my community again, and this is a trade that I took personally. Okay, so this was the sell from gold. How did I took this trade? This is, I can't map out right now, but let me show you. You see this place, right? This is what? A break of a structure, and at the same time we have here another break of a structure. We have the liquidity and we have the POI. So I took this trade and I closed when it was 1 to 11. Pay attention, I closed this trade when it was 9 to 11. Why? Because I was knowing that price was going to somewhere. A price came to take this liquidity out, so I took profit. TP, easy as that. So guys, you need to learn about market structure. Okay, if you don't learn about market structure, you can't do anything about this. It's very important for you to learn. So guys, take care. I think this is the end of the video. Next video is going to be about liquidity part of the strategy, and some people ask me to teach them about bias. Please be patient, we'll get to the bias point, but right now what I want you to understand is the market structure, because it is very important. So guys, that's all for today.